Again, that new 2017 low has been hit on the contract. Oil down more than 2% yesterday at 42.53. Let's bring in Adam Johnson. He's the founder and author of Bullseye Brief and a former oil trader, we should say. Let's get your perspective on that. You know, are we going to get that $30 range for oil? And this really does seem to be having a bad effect on energy stocks in particular.
Well, you know, this is actually a wonderful thing. The fact is, we here in this country have cracked the code on oil supply. That's thanks to all these shale formations that we found around the world. So it means that OPEC is no longer relevant. That's very good news. I know for a while we were all saying that when the price of oil goes down, it somehow is a negative thing for the economy because it suggests weakness. No, this is about supply. Now, if you want to say how far is it going to go down, here's the deal. If you take oil down low enough, you're actually going to shut in some of that supply. So there's kind of a natural break, to be honest with you, Cheryl, on the downside. And I think it's here in the low 40s. So my call for my subscribers of Bullseye Brief is trade oil as a range. 42 on the downside, 55 on the upside. And by the way, I say 55 on the upside just because it's the opposite. You take oil high enough, and all of a sudden all those guys who are producing oil start selling futures as a hedge. So that's kind of the oil look snapshot here in this country.
Adam, another big story this morning is Tropical Storm Cindy churning the Gulf of Mexico, home to so many of our rigs and platforms. Do you expect that? And is that why we're seeing oil prices come up a little bit right now? Potential disruption?
Yeah, they're up ever so slightly, and yes, that's absolutely going to have an impact. You got to get people off those platforms. That is critical. You know, we all learned in 2010 with that BP oil spill that these are very powerful structures, but they're also fragile. So people tend to err on the side of caution these days, and that's why they've started evacuating all those offshore platforms. But as quickly as they shut them down, they can turn them back on. So if there's any kind of blip from the weather, it's only going to be most likely 36 to 72 hours, assuming that, you know, there's no serious damage.
Are you bullish or bearish then on energy stocks, Adam?
Oh, I'm bullish because you have a lot of these names. Take, for example, Pioneer. Ticker is PXD. This is the #1 operator, the #1 shale producer in the #1 shale, the Permian Basin. This stock is down about, call it 20–25%. This is actually where you want to buy it. So as a matter of fact, I wrote that one up for my Bullseye subscribers. I also like Concho, CXO, and EOG. Obviously, that ticker is EOG. Those two companies are incredibly conservatively run. They manage for cash flow, not simply revenues. So, for example, they only go out and drill when they have cash flow on existing wells. You have to trade oil as a range, 42 to 55, and you do the same with the oil names. They're a buy down here.
All right, but no 30. I like that one, Adam. Adam, thanks this morning for your perspective.
Thank you, Cheryl. Good to be